Yay! Welcome to my session today, and we're going to be talking about 15 reasons why investing in stocks is the superior investment strategy, right? And I'm going to be giving you 15 reasons. That's one, five, and another five. Isn't that amazing? Okay, before we get started, just give me a moment so that I make sure that we are live on all the platforms. All right, welcome back. My name is Dr. Linda Pajuel. I'm the founder of Investonomy, and today I'm going to be telling you all the hidden reasons why you should be invested in stocks. And not just about investing in stocks, like investing in stocks as your primary way of investing the money that you have. All right. Now, I don't want to take it for granted that you actually understand what stocks are. Why am I saying that? Sometimes I talk with people, we're talking about stocks, but they don't really understand what stocks are. So, what are stocks anyway? Stocks means stocks are like documents that show that you are now one of the owners of a particular business. All right. So that is a document, but because we're in the digital age, that document is digitalized. So they may just give you like a serial number, but that serial number eventually leads to the document that shows that you are one of the owners of a very big business. All right. And specifically, I am talking about investing in stocks through the stock market. Why is that the case? I also remember giving a talk somewhere and I was talking about investing stocks. So there was this lady, she has been investing in companies privately, right? Companies she consults with, and she invests in those companies, and she was getting confused with what I was saying. So these days I try to say, hey, I'm talking about investing in stocks through the stock market. Now, with that out of the way, we can safely say that to invest in stocks means to own established businesses. So this is different from you see a new business coming up and you want to you want to go and invest in it like angel investors do, or you want to go and start your own business as entrepreneurs do, right? These are all forms of owning businesses. But when you're investing in stock, it's like there's this business, the business has a CEO, has a board, has is running, has all their systems, has salespeople and everything, and you buy their stock. And by buying their stock, you become part owner of that business. What does that mean? When the business make profit, you are going to share in that profit, right? Then when the business make losses too, you are going to share in the losses because your stock price will drop, right? Which is why you don't just go out and invest in stocks. You have to actually know what you're doing. That's how you find the businesses that are really doing well and invest in them and be able to separate them from the businesses that are not doing well. All right. So what kind of businesses are we talking about? Like, I'll give you an example. And I'm not saying you should go and invest in this. I just want to give you an idea of the kind of businesses we're talking about. We're talking about big businesses like if in your neighborhood you have filling stations, and these filling stations are like, all these filling stations that when you drive some distance, you see one, then you drive another distance, you see another one. Those kind of businesses, like you may be talking about 50 filling stations across your city, right? Now owned by one company. So those are the kind of big businesses I'm talking about. Let me use modern day, like maybe companies that may be easier for you to understand. Like, for example, when you talk about Apple company, when you talk about Tesla, when you talk about some big restaurant chains, when you talk about companies like Netflix, when you talk about companies like the banks, right? Like, I'm not saying you should go invest in this, but I'm just calling names. Like when we're talking about big businesses, I want to give you an idea of how big. So if you think of a bank, right? Let's say you use a particular bank, you will notice that that bank is going to have several branches across the country. Even sometimes outside the country, they'll still have branches. They are very big, but eventually all the branches are owned by one company. So those kind of big companies, their stocks are sold in the stock markets, right? And these are the kind of businesses I'm talking about. So I want you to know that investing in stocks is also different from what they call stock trading, because this is another misconception. When I talk to people about stock investing, no matter how I try to explain it, their brain is speaking stock trading, and they are not the same thing, right? So when you're investing in companies, investing in stocks is like investing in companies. So you find a great company that is doing so well, you know what they are producing, you know that they are doing well, you know everything they are doing, and what? You go and invest in them by buying their stocks. And then you follow that business for a very long time as they continue to do what they know how to do best. Now, if at any point in time in the future, the business changes, maybe the industry collapse or is about to collapse, or maybe that particular company, the founder died, the person that took over is no longer doing well, those kind of historic deviation from the normal, then you can think of selling the stocks of that company, and then you can buy other companies, and you can buy more than one company at once. This is what stock investing looks like. Stock trading is different. Stock trading is, you go to the stock market today, and sometimes you are buying this stock and you're selling it today. So you buy it at a lower price. You're looking for who will give you extra money on top, and you sell it to them. Sometimes it may be in day, like within a day, within 24 hours. Sometimes some people will buy and they will hold the stock for a few days to see somebody who will add money on top of what they bought it for, and they will sell it to that person. So this buying and selling of stocks on daily or weekly basis, maximum within within a few months, right? Where people are trading stock, they buy and they look for you to add small money on top, and they sell it to you, and then they go back and look for way to buy it cheap and they buy. This is stock trading, and this is not what I'm talking about, okay? This is not what I'm talking about. Are you listening? So we are specifically talking about stock investing, which means finding great companies that are doing well, buying their stocks, becoming part owner of the business, right? Holding the stock as long as you can, not as long as you want the investment to stay there, or except you need the money, which you can then sell and that business continue to do well over time. So this is what we're talking about. It's important for me to clarify all these things, so that when I'm saying, hey, here are the 15 reasons why investing in stocks is a superior investment strategy, we're on the same page. Not that you will be thinking that, oh, what is she talking about? Is it those things that blink on a laptop or screen? Or is it the stock trading? Those are not the things I'm talking about. All right. So when it comes to like when you say something is a superior strategy, what does it really mean? It means that there are other strategies. It acknowledges that there are other investment strategies you can employ. You see people doing angel investing. You see people, investing in what is called private equity. Then you see people investing in real estate. You see people investing in human capital, right? Like they will invest in their friends, and hopefully the friend will pay them back, or they will invest in other humans, right? When I say that, some people laugh. I actually come from a background where that is a thing. Like you are growing up, you find maybe a grown male in another family, and you train them. And when they grow up and they are doing well, they train your children. Like that happens actually. So human capital investment is also a type of investment. Some people will go into private lending. So there are different kinds of investments out there. All right, but I'm trying to tell you that after deep research, right, testing a lot of these processes, I noticed that investing in stocks is a superior strategy, and I'm going to be explaining them to you. And sometimes you may see me compare them with one or two other investment strategy. All right, so let's go. So here are the 15 reasons why stock investing is a superior investment strategy. Let's start with the first one. The first reason is that stock investments are mobile. Stock investments are mobile. What does that even mean? It means that in this world where we live in right now, right, everything has gone to the computer, everything has gone to the laptop, to your phone. You can do a lot of things. When you buy stocks, you buy it through your stock investment account, but mostly you're going to access that account through your phone or through your laptop, right? Which means anywhere you're going, you carry your investment with you. Especially in this world where people travel from city to city, they relocate, right? You see somebody today, they're in Canada, tomorrow they've moved to the US. They're in UK and they've moved to Canada. Or they're in Saudi Arabia and now they've moved to the UK, right? You see people move. The word globalization means that people are always moving. So you need an investment that match reality, that is also mobile, so that when you move, you can move with your investment. I remember talking to a lady, she came from Ukraine to Canada, right? I met her at a trade show, and we were talking about stocks, and she was like, she have real estate investment in Ukraine. When things started going haywire in Ukraine, she moved to Canada. Now her real estate is there. Nobody's really attending to it, right? So if it was stocks, what do you think is going to happen? As she's moving from Ukraine to Canada, she will have just moved with her investment. Full stop. It's as simple as that. I was speaking to another lady. I was speaking to another lady. This particular lady, she's in the UK right now, but she moved from Nigeria to the UK. You know what is interesting? So we're talking about stocks. Now she's in the UK, so she wants to invest in stocks around her. But while she was in Nigeria, she was already investing in stocks, and she had access to a stock investment account, even though she's in the UK, right? So stock investments are mobile, so they match today reality, where people, especially young people in their 20s and 30s, right? Or even people in their 40s, are moving a lot. Today you are in one country, the next day you have moved. Today you're in one city, the next day you have moved. You know, you are. Let's use Canada for example. Today you are in Vancouver. The next time your company you find a better job in Toronto, right? And you move. So, or you are in California and now you move to New York. I mean, people move all the time. People move all the time. You see somebody moving from Kent to London, right? You need investment that match that mobility, that you can move without having to sell them and then look for where to buy. You may not even be able to buy in your new place, using like comparing that to real estate. So this is one of the reasons why investing in stocks is a superior investment strategy for our time. Maybe I should have added that to the title, for our time. All right. Now, the next one is above average returns. Above average return. When you are like, sometimes when I'm talking to people who are doing different kinds of investment, they start talking of, they are calling some kind of very low percentage return. Like, I'm like, how? Like, okay, I remember, to be precise, I remember someone was asking me to come and buy, there's this thing they call like GIC. It's like an investment, a type of investment maybe you can buy from a bank or something. And the person was like, yeah, the current rate right now is 2% per year. I'm like, I don't know how I'm going to put my money somewhere and wait for one full year and you give me 2%. Let's look at what that looks like. What is the 2% of $1,000? Let's calculate. Bring out your calculator. Okay, wait, I'll do it for you. My head can't really quite wrap that up, and I don't want to give you a wrong figure. So let's say 2 divided by 100, right? Just give me a moment. I'm going to bring the number for you. 2 divided by 100 times 1,000. So 2% of 1,000 is $20. So if I put 1,000 somewhere, I'll wait for a whole year for you to give me $20. So I'm just trying to tell you that, of course, there are some that then you raise it to 5%, then you raise it to 8%, you know. But when you know what you're doing in the stock investment world, you start, even when you're doing the basic that everybody can do without, whether they like maths or not, that's without requiring calculation, you're looking at it's at least 10%, right? Then when you start doing the one that you can do 1 or 2 calculations and possibly even allow AI to help you do the calculations, you are looking at 20%, 25%, 15%, not like 15, 20, 25%. You see what I'm saying? Per year. So for things that are correct real investment, I'm not talking about for Ponzi scheme. Okay, if it's Ponzi scheme, you can afford to get 100, 1,000%. Okay, but within a short distance, they'll tell you your money has disappeared. But for things that account for real investment, 15, 20, 25% a year is actually above average. And this is possible with stock investing. Some people don't know this. Like, I remember someone was talking to me some time ago, and the person was like, yeah, I went for the high yield investment account. And I said, what's the return? And the person said less than 5%. right? So even the thing that's called high yield, your mind go blow, high yield, but they're still talking about less than 5%. So with stock, you get above average return, if provided you know what you're doing. All right. So this is another reason why I said stock investing or investing in stocks is a superior investment strategy. Now let's go to the next one. Discreet. It is discreet. That's the third point. Investing in stocks can be discreet. If you don't tell somebody you're investing, so they won't know. It's not like property that, oh, I just bought a house. Everybody know you have a house. Everybody know where the house is, you know. So when with stock, because you do it with your phone, it can be discreet, which means you can have $1,000,000 or $10,000 or $100,000 or it's equivalent to your currency, okay? And the person sitting just beside you won't even know. Oh, the person living beside you won't even know. You see the point? It's discreet. And while some people may not appreciate this point, others will. People who have the need to invest without everybody really poking eye into their investments. Whether you are male or female, it can apply to you. So unlike other kind of investment that are so out there, like so visible for everybody, when you invest in stocks, you do it in your phone. What does that mean? You don't even need to take a meeting, because when you say something is obvious, you think it's about, oh, the property. I don't have to tell you I'm going to buy the property. But no, if you buy the property, you either live there. Okay. If you don't live there, you have tenants. You have to go check things from time to time. The lawn has to be, the snow has to be mowed. The lawn has to be, like you have to maintain the building. So many things. So it is difficult to be discreet about it, especially with people close to you. Some people need that a discreet investment, and stock investing or investing in stocks can provide you that. All right. This is another reason I say investing in stocks is a superior investment strategy of our time. Of our time. Okay. I'll give you an example. Okay. Some people may relate. So I remember there is this guy, you know, he bought his first property. He bought his first property. Everybody was like, yay, congratulations, you now have a house. Woo! And then he bought the second one. And everybody like, oh, are you the only one that wants to finish all the houses? But okay, congratulations. You know, his people summoned him. His people summoned him and said, hey, you are buying all these properties, but the family will have needed you to do A, B, C, D before you go ahead to start investing. Why do you think that's happening? That's happening because they are aware that he has 2 properties. So all of a sudden, it has become a problem. Now, imagine after being summoned, he goes to buy the third one. His family is going to be torn apart, right? So when I talk about stock investing being discreet, some people think is that really necessary? Some people need it. But that same amount he invested in a building, he can have it in stocks and have it in his phone, and nobody is going to invite him for family meeting to discuss, to force him to invest in a certain way. Okay, now let's move to the fourth one. The fourth reason is stocks are easy, like in stock investing, it's easy to find good deals. So if you learn how to invest in stocks today, within the next 1 month, for example, and a couple of months, you are going to find great stock investment opportunities that you are going to be able to invest in, and you see your money growing, right? Now, for you to appreciate this, let me give you an example. You know, there was a time I was learning how to invest in small businesses, how to buy small businesses, which is like how to invest in small businesses. So I like the normal Dr. Linda way. I went out of my way. I bought stocks. Sorry, I bought training. I joined masterminds and all of that. We learned that's not the problem. Guess what? To practice what we were taught, a whole year, I was still looking for a small business to buy, and I have not found. And actively looking for, by the way, joined all the different platforms, signed up with some business, like small advisors that handle sales of small businesses and did things like that for a whole year. And then one of the mentors said, well, most people who even want to do this, they want to set out 1 to 2 years just to look for the deal. I'm like, whoa, that's a long time. Do you get the point? So there are lots of investment that for you to even find what to buy is a lot of work and takes so long. But with stock investing, or when it comes to investing in stocks, you can find great deals as fast as possible once you know what you're looking for. All right. This is the reason I said that investing in stocks is a superior investment strategy. Because when you invest, you like, time is part of what makes an investment great. If I'm using 2 years to look for what to invest in, what's happening to my money within those 2 years? And even after I find that one, how long is it going to take me to find another deal? Okay. So this is something that is really good about stocks. It is easy to find good deals from the stock market. All right. Now, let's go to reason number 5. Stocks, or investing in stocks, is compatible with busy work life, especially for busy professionals. If you're listening to me right now and you're a busy professional, this applies to you, right? People who are busy, you are working, you're a marketing officer, you're a program coordinator, you are a manager, you are, you're a regular worker, but you are busy with work, right? You don't want your investment to start taking you the whole day, or they will not tell you when you have to bring out time in order to focus on the investment. No, you need something you can do quickly one evening when you come back from work, and it will even eat your evening, right? And you can still go and do whatever you want to do. And that's not one evening every day. That's like one evening that month, that quarter. Do you get the point? So I see that investing in stocks is very compatible with a busy working class, busy work life. So if you're a busy working class person, then listen, because I think you get it, right? You get it. And remember, I already told you that I am not talking about stock trading. I already told you I'm not talking about, I already explained the kind of investing we're talking about at the beginning of this session. All right. So it's really compatible with busy work life. This is the reason I say that investing in stocks is a superior investment strategy for our time. All right, now let's go to reasoning number 6. You can manage it yourself. That's the DIY approach, right? So you can manage your stock investments by yourself. This is a very good thing, right? This is a very good thing. And very importantly, even as your investment portfolio grows, like whether you invest $1,000 or you invest $10,000 or you invest $100,000 or you invest $1 million, you can handle all of it from your phone. In fact, it will take the same time for you to handle them. So as your investment amount increases, your work does not increase. But what happens when you start buying properties? You buy one, it's sweet. You buy the second one, you're having a headache. You buy the third one. It's like now there's so much work all over. In fact, it has to become your full-time job, or at least qualify for what is called a part-time job as you manage the properties. Or you may have to, at that point, find a property manager to assist you, right? It's so difficult to keep up all by yourself, especially when you're combining with your busy work life. So the fact that you can manage your stock investments by yourself, even as your investment portfolio grows, is one of the reasons I say that investing in stocks is a superior investment strategy. All right. Now let's go to reason number 7. It can be done without loan. Now I get it. Loan can be cool, right? As some people think, loan can be cool, especially like whether you are buying a small business or you are buying real estate. You have to use loan most of the time. I mean, for regular people, okay? When you say that now, I know that there is an intellectual out there, okay, not you, okay? Somebody, third party, who is going to be like, Yeah, but you can buy real estate without loan. Yeah, have you bought real estate without loan? Just the point. So I'm not talking about whether you can buy real estate without loan. That's not the point. For many people in their 20s and 30s or even early 40s, I'm not saying nobody in their 20s or 30s have bought real estate without loan. That's not the point. I'm saying that most people in their 20s and 30s or even early 40s don't buy real estate without loan. Are we on the same page? Okay. So now I am saying that stock investing in stocks can be done without loan. But why is that important? It's important because the moment you take up loan, that's another added pressure. If you don't believe me, ask people who have loan. And if you already have loan, you know what I'm talking about. It's another added pressure. Imagine having a property that if you miss the payment, maybe 3 times, you're already running the risk of foreclosure, right? Why? Because of the loan part. So the loan part does not allow you to have breathing space. So wouldn't it be nice to do an investment that you can do and own completely with the money that you have currently, instead of having to borrow thousands or hundreds of thousands of dollars to add to it, right? And then that becomes your responsibility. By the way, as you once you borrow one or twice, then your capacity is also limited. So the fact that you can invest in stocks without loan is one of the reasons I said that investing in stocks is the superior investment strategy for our time. Okay, now let's go to reason number 8. Investing in stocks is applicable as a long-term strategy. Investing in stocks is applicable as a long-term strategy. What does that mean? That means that if you choose to invest in stocks as the primary way you invest in stocks, or the primary way you invest your money, right? You can continue to do this from today till the day you die. It can be applicable long term like that. Think of many other investment ideas. When they come up, everybody's like, "Yay, it's here." 2 years later, it's no longer a viable process. I'll give you an example. I remember in Canada, there's this thing they call new builds. We are the real estate guys. Okay, there's this they call new builds, right? Okay, your a developer is about. I'm saying it in a layman way, okay, not in academic way. A developer wants to build a house, and then you can sign up for one of the units of that house, and it's like they'll give you a paper to say, okay, oh, this unit will be yours, and you pay a down payment. The good thing is that at that point you are not expected to go and take up a mortgage, the loan part, right? So people love it because I'm not going to go and do loan. That's why I say that even though people feel they have to do real estate with loan, they will prefer an investment style that you don't need loan. Anyway, let's keep going. So, when this thing came up in Canada, there was a time it was like, it's still here. People still do it. But as investment strategy, okay, the landscape is different now. Because now there are rules and regulation around that. So people just do it when they want to buy their first home, right? Or maybe the second one, just like for personal use. Let me just put it that way. But as the investment, when this idea came up newly, there were people who were putting down payment for 5 houses, 10 houses. I'm telling you, I'm not even guessing. All right. So it's like, oh, cool, we make a lot of money. But guess what? 3 years down the line, it has gone belly up, right? So there are some investment strategies that they are just here, ephemeral. They are ephemeral in nature. Today, 1 year, 2 years, 3 years, you are making sense out of them. It's working. The next 4, 5 years is gone. That's why I'm saying that when it comes to stock investing, it's been working for years. It will continue to work for years because it is sound. The foundation is right. You are investing in businesses, so those businesses exist. You can see them, and they are running every day. In fact, some of those businesses, if they collapse, the world will start collapsing. So it's not just to say, but the business can fail. So you see, let me give you an example now. You see a company like Facebook or Meta, as it is called, is one of those big businesses that have their stocks in the stock market. I am not saying you should go and invest in Meta. Okay, so this is not a stock recommendation. I'm giving you an example. So let's say you see Meta now, right? So imagine you wake up, no more Facebook, no more Instagram. Like, think about it. So some of these big businesses, it's so cool for you to be like, but they can fail. Yeah, but they can fail. But before they even fail, many other things will have failed. You see the restaurant chain in your city. Let's say for those of us in Canada, let's say Tim Hortons. Tim Hortons, Tim Hortons is owned by another company whose stock is in the stock market, for example, right? So when Tim Hortons collapsing, so some of these businesses, they are here to stay. That's the point, right? So it is possible for you to invest in the company and the business keep going. And if you check some of them, they are celebrating years and years of business operation. And the good thing is, even when one company is dying, there's already another company that have matured. So when you are investing in stocks, that strategy is applicable. Foundationally, it is right. It is not, it's different from all these investment styles that just rise up 2-3 years, they've gone belly up, and then you have lost your money and you keep going. I remember I was at a conference and a woman was talking about how, you know, um, uh, investing for Airbnb, I'll call Airbnb, but this is not about Airbnb as a company, okay? Even though Airbnb stock is listed in the stock market, but this is not about Airbnb, okay? So a woman was talking about investing in a property for Airbnb. So she have heard that Airbnb, if you invest in a property and list it on Airbnb, you make a lot of money. All right. So, and like, I don't have any problem with that, but I'm trying to talk about how some things can be ephemeral, right? So she went all out, and she put money, lots of money. She was giving the testimony that investment, in fact, she lost so much, right? Because at around that time too, maybe from the time she had the idea to the time she completed the view, the renovations and buying the property and everything, like, there was a gap, so many things. So there are some investments that, here today they are here, everybody is excited about them. 2-3 years is no longer viable as a way for you to, as a place for you to put your money. But when you come to stock investing, when you come to investing in stocks, you can do it long term. This is one of the reasons I say that investing in stocks is a superior investment strategy. You get me, right? Okay, let's move to reason number 9. I've touched a bit on it, which is that the stock market is established, right? It's part of what we've been saying. The stock market is established. In many countries, the stock market is more than 50 years old. In many more, it's more than 100 years, and keep going. So it has been here. It's like something that has been tested, and also the systems are mature. So it's so easy for you to put your money and not be talking about you're like, oh, the stock market has been destroyed. You get the point? Like, unlike so many other investment systems out there, you see people, okay, like, for example, you see people say, oh, I created a crypto coin, right? After some years, what do you notice? Let me talk from what people have told me face to face. What they've said, some people have said is, I bought this coin from a website. You see, it's not a matured system. Somebody's website. I bought this coin, this crypto coin from a website. Now I want to withdraw my money. Nobody's willing to buy it from me. Why? The system is not mature. It's not even whether the coin is good or not. The system is not mature. So when I say that the stock market is established, I'm trying to say that there are rules and regulations around it, or organizations set up to monitor it. Whether they are 100% effective or 90% effective is a different story. But this is different from systems or investment strategies that don't even have organizations monitoring it. You get the point? Because why is it important? It's important because what I am talking about where you can invest significant portion of your net worth. I'm not talking about whether you can test. When it comes to testing, you can test with any system, right? But when it comes to investing a significant portion of your net worth, you're looking for something that is established because you don't want to go and invest and tomorrow all your savings is gone. That would be sad, right? That would be sad. Okay. So because the stock market is established, it is one of the reasons I say that investing in stocks is a superior investment strategy of our time. Okay, now let's go to reason number 10. It can be done from your couch. It's connected to being done through the phone, but it's different. I'm trying to tell you that this is something you do from the comfort of your home. You don't need to go anywhere. You don't need to take any meeting with anybody. You don't need to go, go for house viewing or going out to check different kind of businesses, or even having to manage the managers you put in place to look after your investment. When you're investing in stocks, you do it from your couch, well, or your table. But I think couch sounds nice. Sounds nicer. So you can do it from your couch. Someone like me, I'm very lazy. Okay, let me just put it that way. Let me just put that out there. I'm very lazy. I don't like work. By default, I'm kind of more of an intellectual person. All right. I do most of my work, I do with my brain instead of with my hands. When you need me to do things with my hands, right? No, 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 no. Like, you got the wrong person. So if you're like me, you enjoy the idea that you can do an investment from your couch. For me, it's like, oh my God. You mean I don't have to go to the site to see what is going on? Oh, cool. So you can do it from your couch. Yeah. Is that amazing? Is that amazing? Okay. Because you can invest in stocks from your couch. This is one of the reasons I say that investing in stocks investing in stocks is a superior investment strategy of our time. Now let's go to reason number 11. You can start with the money you have right now. Isn't that amazing? You can, when it comes to investing in stocks, you can start with the money you have right now. Why is that important? Okay, again, I was at a conference. We're talking about different kinds of investing, right? So, someone came up and presented and said, "Oh, we help you manage your money, blah 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 blah." And then someone else fired back and said, "How much is the least for you to take?" And the person said, "We can only work with you if you have like $1 million plus." Okay. Now, this is not the problem, but it means that, well, after you heard all that good news, you better go look for $1 million before you approach, right? That's what I'm trying to say. That there are investments you hear, they are nice, they are good, but how much do you need to start? You may need to save, for regular people, they may need to save another 2 years, 3 years, 4 years before they've eaten the one you saved. End of story. Okay. Then someone else came and said, "Oh, you can invest in this building right now. To start, you need $80,000. A lot of workers, I mean, people who are working in great companies at good senior level position, they don't have $80,000 sitting in their bank account right now. They will need 1 year, 2 years, 3 years to save that. But the problem is, what happens to the one you start saving before the 3-year mark reaches? So it's very easy for people in their 50s to go and do those kind of investments. After all, they've been saving for years, right? But for people in their 20s and 30s and maybe even early 40s, a lot of them, I'm talking from conversations, a lot of them don't have this money packed, okay, somewhere. That's why sometimes when I'm talking, I keep emphasizing that my videos here are for people in their 20s, 30s, and maybe early 40s, all right? Because it is a different demographic. The challenges are different and unique compared to maybe people in their 50s, late 40s, 50s, and upgoing, right? Because they've had a very long time to save. So it's very easy for that person to dish out $1 million to start investing. But for regular people who are even doing great jobs, many people don't have that money sitting down. And the problem is that when you want to come and start keeping the money in your savings account for the next 3 years, before you know it, the money has disappeared because uninvested cash disappear over time. So even if you want to do those big investments, you can start investing right now with the amount you have. You can start investing in stocks with the amount you have. And as your money grow, you can then put it together and use it to do the bigger investments. I was talking to a guy that he told me, he said, hey, Dr. Linda, of a truth, I prefer real estate investing because he's the kind of guy that does things with his hands. I said, that's awesome. So he opted to take stock investing as a bridge. So it's like, whatever I have right now, I invest in stocks until the money grows and I have enough, then I can take that bulk money and go and invest in real estate. That's also doable. So the point is that because you can start with the money you have right now, be it $1,000, be it $10,000, be it $100,000, be it $300,000, whatever amount you have right now, you can start investing in stocks with it. This is one of the reasons I say that investing in stocks is the superior investment strategy of our kind. Okay, now let's look at reasoning number 12. You can liquidate in a day. This clap was this clap was not planned. Okay, you can liquidate in a day because the worst thing, what is worse than having an investment is having an investment, needing the money from that investment because maybe something came up and unable to access the money. Why? Because the property you have, you cannot sell. And this is more common with even people that own, let's say they own shares in a private business. Now you want to sell, nobody's willing to buy. Or you own a small business, right? You bought a small business. Now you want to sell it. It's like as an investment, right? You want to sell it, nobody's willing to buy. Or they are pricing you half what you bought it for, which means you have to take a haircut. That's how you say. You have to take a haircut. So that one is not an investment after all because you're losing money. I remember an incident where someone owns a property and something happened, a family tragedy happened. They needed money to be able to solve that problem, but they couldn't sell the property. Not that they couldn't sell, the people were pricing the property half the price or something significantly lower. So, and they didn't want to sell it for that cheap. So at the end of the day, it was like they had money, but they did not have money. But when it comes to stock investing, like when it comes to stocks, right? Let's say you have $10,000 stock in your account now. I'm just using very low figure so that nobody's getting scared here. All right. So let's say you have $10,000 of stocks and you need $1,000 from there for something. You go in and you liquidate, like you can liquidate that $1,000 of stock, or you can even liquidate the 10,000 if that's what you want. You can liquidate that money today. Maybe they will tell you, okay, the money will be in your account in 1 or 2 business days, but you can liquidate it today or within the next 24 hours. In a day, you can liquidate it. So some people, like, it's important for you to think of what happens when everything is going well. But when it comes to investing, you also have to think of what happens when everything don't go as planned. So when the investment strategy is so easy to get in, but for you to get out, it becomes a problem. You have to look at it twice. So with stock investing, yes, you can get in, but also you can get out, especially when the need arises. That speed is important. Sometimes it's even the speed of getting into another investment. I'll give you an example. So I remember a time I invested in some stocks. Now, another stock that I love so much, the price dropped suddenly. You know what I did? I liquidated some stocks that I already like. So imagine I own 2 different stocks, right? One, the price dropped, and I like this stock so well. So it's really cheap right now. The other one, the price is still normal. I liquidated this one that the price is still normal to buy more of this one that drops, that is so cheap. Because I know that thing was like, it's like it was a transient issue. It was going to be resolved in no time. But I wouldn't have been able to take advantage of this if if I don't have the ability to liquidate fast. This is the point. So sometimes it's to solve problems, sometimes it's to even make a better investment. But that speed, ability to liquidate fast, is very possible in stocks, and it is not as possible when it comes to other investment styles, real estate included. This is one of the reasons I say that investing in stocks is a superior investment strategy. Now, let's go to reason number 13. You know, I told you I was going to give you 15 reasons, right? Reason number 13 is that you can liquidate small portions. All right. So it means that, let's say you have $10,000, but you want to only liquidate one, you need $1,000. You just liquidate $1,000 and leave your $9,000 cool as it continues to grow. This is important because I've seen, like, sometimes you have a property, you need just a portion of that money, but you put all the money in the property. So it's almost like if you need to sell, you need to sell the entire thing, right? So you don't have so much flexibility. Some people argue that, yeah, but I can go out and take up a line of credit and use it. Yeah, but what do you call it? I want to hear you repeat. What did you call it? A line of credit. What does that mean? The moment you take out that, you also have a responsibility, right, of paying the interest, of servicing the line of credit, of doing whatever you need to do before you can put the money back. And sometimes your goal was not to finish and put the money back. You have $10,000. You just want to take $1,000. That's what you want to do. The fact that you can go take a line of credit for that does not mean that that is the ideal. That's what you do when you can't sell a portion of the property. So I am saying that it is possible to do partial liquidation, to liquidate small portions of your investment when you are investing in stocks. And for this reason, I say that investing in stocks is a superior investment strategy. Let's go to reason number 14, which is investing in stocks is truly passive. There are a lot of things that parade themselves as investments, but eventually they turn to a job. Eventually they turn to a job. And if you are like me, that don't even like work, we the lazy ones, if you're like me that you don't like work, then it is even worse for you. Even people that don't like work, they will still love to get their money, without overworking themselves, especially when you think of your portfolio growing. It's so easy to feel like, don't worry, I'll manage my property. When it's 1, when it's 10, it's tiring. Do you get the point? But that same amount, if you put it in stocks, it's not like, it's the same time that it will use you to that you will use to even invest $10,000, that you will still use to invest $100,000 in stocks. So investing in stocks is passive because it does not require so much of your time. It's a baby girl lifestyle or baby boy lifestyle. What does that mean? Easy. Like, it does not require. I'm lacking words to explain it. So when you are getting your profits, you are not overworking yourself for those profits to come in. Okay? So investing in stocks is truly passive. So if for people that are looking for passive income, that's where you should look. Look at investing in stocks. You're looking for passive income, look at investing in stocks. Because many other things. Now, let me tell you, there are things that you can invest in. Ideally, they're not passive, but you make them passive. The consequence is that you will lose the investment. Okay? So let me give you an example. So let's say you buy a property, and you're supposed to be looking after that property. right? But you choose that, you know what, I don't need to go there. I don't need to go. Just put tenant, whatever, however they want to do it, they should do it. So it's something that is not truly, truly passive, but you've made it truly, truly passive. What is going to happen is that your property will be run down. I remember long years ago, when I was still renting, right? So when we went to view a house, like the house itself is covered with bushes, like you probably have to raise a leaf to enter. I was like, I did not see this because they had shown the inside of the house, right? Like I was like, but what came to my mind is, where's the landlord? Where's the landlord? So, of course, needless to say that the inside of the house was, don't go there. This was long years ago, right? When I came to Canada as a student. So at that point, it was still like student life. But the point is, where was the landlord? That is the landlord that turned real estate into a passive investment. But it's not really passive. You have to check on your building. You have to you have to clear the grasses. You have to move the snow. You have to make sure everything is functioning. As I'm talking to you now, I probably need to call a plumber soon to come and check on a leaking faucet, right? Real estate is not as passive. Even when you're a landlord, it's not that passive. Today today you are repairing key of somebody who locked themselves out, and tomorrow you are changing leaking faucets, and the next day you are checking on the toilet because it's not flushing. If the property must be maintained, those things are necessary. So investing in stocks, because what, when you invest in stocks, you invest in businesses, you you benefit from the profit or loss of the business, but you don't manage the business. The business has a CEO who is managing, has a board who is taking decisions. You don't have to do any of that. So the business is being managed. The businesses you invest in, they are being managed. They are just not managed by you, and it's not your responsibility. That's why, as an investor who is investing through stocks, it becomes truly passive for you. Okay. And this is the reason I say that investing in stocks is a superior investment strategy of our time. Let's go to the reason 15, which is, it is learnable in 30 days or less. Why am I calling 30 days? There are lots of investment strategies out there that for you to learn it, you're going to take months. And even at that, after you have finished learning, to practice, to find a deal becomes a problem. I gave you an example of what happened when I was trying to learn how to invest in small businesses. All right. Is learnable. Like, that part of being learnable is also important, because it means that somebody can teach you. It's not just about dabbling, and before you know it, you make grievous mistakes. All right, it's learnable. And this is what my company does. So Investonomy, which is the name of my company, is created for this, to teach people how to invest in stocks like a pro. To teach people how to invest in stocks like a pro. Why? Yeah, everybody is investing in stocks, but how many people are actually making money from stocks? So it's not just whether you can open an investment account and buy one or two stocks. You can. But where does that leave you 6 months later, 1 year later? If you already tried it, you know where it leaves you. You lose money. So at Investonomy, we teach you how to invest in stocks like a pro, so that you can do it with peace of mind, without second guessing your investment decisions, without losing your hard-earned money. At least you know what you're doing. You know the decisions to take and when to take them. Above all, you do it yourself. We don't invest for you. We teach you how to do it yourself. So because investing in stocks is learnable and practical and practicable, this is one of the reasons I say that investing in stocks is the superior investment strategy of our time. Anyway, there's one loophole for you to look at, for you to be aware of, which is that most people use the trial and error method when it comes to investing in stocks. You should not. Don't do it that way. But why? You can lose money. When you are doing trial and error, you lose money if you go and invest a lot of money. But most people, they know, because they know that they are doing trial and error method and they can lose money because they are using trial and error method. You know what they do? They then invest tiny. So you see somebody that is worth $500,000. When they are investing in stock, they will invest $1,000. Do you see the point? A very, very insignificant portion of their net worth, they try with that. Now they think, if you are doing this, if you're one of the persons doing this, you think you are smart, but you are not. I'm not insulting you, please. I'm talking of, I'm having a conversation here. You're not smart because you're not losing money in that sense, but you're losing time. If you were able to invest properly and invest a reasonable amount of money, how much will you have made? That is the opportunity cost when you are testing with $1,000, even though your net worth is $500,000, or when you are testing with $100, even though your net worth is $100,000, right? Or when you are testing with $10, even though, or $100, even though you have $10,000 in your savings, you lose time. You don't see the money you are losing, but there's opportunity cost there. So what, you can lose time and money as well. So this is where the trial and error method leaves you. All right. Instead, I want you to use the human approach. Use the human approach when it comes to investing in stocks. You know, now that I said it, it's so funny because somebody will be like, oh, what's the human approach? I'll tell you. When humans want to do something that will have serious impact on our lives, what do? We learn it first. That's the human approach. I'll back it up with examples. Me, by background, I'm a dentist. I don't know if you already know that. By background, I'm a dentist, okay? I spent several years in dental school studying the human body, you know, how the human body functions and everything in order to become a dentist. Long before I extracted my first tooth, I extracted someone's tooth, not mine. Long before I did that, long before I started working on patients, I learned years. So the human approach is that we learn first. When we want to do something that will make a great impact, we learn. We put the learning first. Then we're going to do. I'll give you another example. Do you drive? Do you have a car? Even if you don't have a car, do you drive? Or do you have a driver's license? What happened before you were given a driver's license? You learn how to drive. Driving is risky. Do you know that? You can kill someone when you are driving if anything goes wrong. Even your life is in danger if anything goes wrong when you are driving. But we all drive, right? Because we can see the advantages of driving. You drive to work, you drive to a business meeting or work interview, as the case may be. But guess what? To drive, you go, you find a driving instructor, you learn, they teach you. Hey, some people will be like, no, I did not learn it. No, even when you did not pay an instructor, you found a friend who is very good at driving, who possibly already paid an instructor to teach them how to drive, and you learn from them. That is the human approach. To do anything that has the capacity to impact us, we learn. So, okay, let's go back to the basics. To be able to speak and count, what do? Our parents sent us to primary and secondary school or high school so that we can learn how to count, how to speak properly, use the correct tenses, right? Learning is core to human behavior. I want you to apply that human approach to investing, because this is a mistake many people make. They learn many things they want to do. Even when you want to bake cake, you see, cake, cake, oh, cake. You want to bake cake. How many of us here? How many, between me and you? How many people, like, if you want to bake cake, are you going to just be like, I think you add flour and egg? By the way, me even knowing this is because long time ago when I was in the university, I had a roommate that used to bake cake. So that's how I even know some of the ingredients. Okay, you learn to bake cake, you learn to bake cookies, you learn. Right? Even when you don't learn, you go to YouTube and find the recipe and then you follow it. That's a form of learning. Eh? Learning is a human approach to problem solving. Apply that same approach to what? Stock investing. Don't just fear, oh, it's nice to invest in stocks, you can get above average returns, and you just jump in. You're going to break your leg, figuratively speaking. You're going to lose money. That's where it's headed. I doubt it's going to end in any other way. Learn. Myself, before I became good at investing in stocks, I felt dabbled in through the trial and error method, and I lost half of my net worth. You probably already know that story. All right. So I had to decide to learn it. And it was at that point that everything changed. But then something happened. When I was learning it, I realized that it meant that I had to read lots of books, go for online trainings, in-person trainings, travel from one country to a different country just to learn. It was super expensive and super time consuming. I was like, why isn't there a program that have put all this information together that in a very short time, as small as, let's say, for example, 30 days or something, or even let's say as small as 1 hour, I can get an idea of what is going on. And then as small as 1 month, I can become a pro, right? Like, that's not too much to ask. I would have gladly paid any reasonable amount of money to get access to such program. I'm telling you. It was so tedious. A lot of time, like there were many times I'll buy a book, I'll read, and when I still get to what I'm looking for, they've not explained it well. I was like, oh, again, it was so stressful. You know how they say that when you look for something and you don't see it, maybe the onus is on you to create that thing, right? So after I learned, I said to myself, hey, Linda, you already have curriculum development skills. You know how to teach grown adults and design programs. I've done that before in my former businesses. And I was like, let's help the next generation to become pro at investing. So it is at this point that myself and my team were able to create a holistic program that can take you from 0 to 100 in a very short time. Anyway, so I'm inviting you to register for our free investing workshop to learn how to invest in stocks like a pro. All right. And the place to register is www.investonomy.com/stocks. www.investonomy.com/stocks. I'm going to put it, one moment, let me grab that link. Can you see it? www.investonomy.com/stocks. That's where to go to register for the free investing workshop, where we are going to talk, like, explain to you how to invest like a pro. This is doable. This is doable. It's not that can you go on Amazon right now, start looking for books to buy? Yeah. How long? At one point first I was like, you know what? I'm just going to gather all the books I've read. But what about the trainings? Okay, let's just start with the books. I'm just going to gather all the books I've read and just, I'm going to gather all those books and just give it to people to read. Then I noticed that it took many people, like for many people, it took them months and they've not even read one of the books. So it's not about whether there are books. Is when are you going to have time to finish 50 books? How many years? Okay. But you can attend a 1 hour workshop and walk away with more information and more direction than even reading 5 books. And those days, most of the legends, they wrote books, right? Because that was what was available in their time. Doing videos like this, for example, was not that common for them. Most of the legends doing videos like this were not common. So that's why I keep talking about our time, our time. Many people in their 20s and 30s right now learn best by watching videos like this, right? I'm a book lover. Oh, I'm a book lover. I'm a book lover. I'm a book lover. You can see my background. I'm a book lover, right? I'm a book lover. But I'm saying that I also understand that people learn more now, learn faster through videos. So I'm inviting you to register for our investing workshop where we're going to discuss. It's an online workshop where we are going to discuss or show you how to invest in stocks like a pro. Go to www.investonomy.com/stocks. Okay, I'll also include the link to the description of this video so that just in case you are wondering the spelling, because that's one thing. Some people when they are typing out Investonomy, they mix the R and the N somewhere. I'll show you. Okay, just a moment. Just a moment. Give me a moment. I want to show you Investonomy so that, yeah, so you can see it on the wall, right? Like INVESTOR, that's investor. And then the last 4 letters is NOMY. Just a moment. NOMY. So it's Investonomy. It actually means the study of becoming an investor. Am I that bookish and academic? Well, what do you expect? What do you expect? I went to dental school. I'm a dentist. So what you already expect that I should be academic. But the thing is that I enjoy teaching, and I enjoy teaching in a way that lay people can understand. Like I don't teach jargons. So some of the feedback I've gotten from my students, some of them is a student that used that term. He said, "You took us from 0 to 100." It was a student that used that. One of my students that used that. Took us from 0 to 100 in a short time. Imagine somebody giving you feedback and saying, "You took me from 0 to 100." How is that even possible? And what are they trying to say? They didn't know much. They didn't really know anything. They were novices and beginners, pure beginners. And yet we're able to take them to a place where they are super confident that they can name that place 100. You get it? The person does not say, "You took me from 0 to 70%. Say 0 to 100, which means the person actually understands that you are very competent right now. You know, there are so many other feedbacks we've gotten. Some people, like I also noticed that a lot of my students in their feedback use this term simple or simplified or simplification, a variant of that word, you know, where they are saying you made it simple and yet impactful. Because something you can make something simple and yeah, you've learned it, but it's like you're still a novice, right? Register for that workshop and let's change your life together. You deserve to know how to grow your money peacefully. Let it be happening on the side while you focus on your primary source of income and you keep going. You know, some people think that they have to become entrepreneurs before they make it in life. I say, no, become an investor. Because whatever you are doing right now that is making you money, you can focus on it. And then you are taking money from that you make and you're investing it. You'll be rich faster than leaving that you are doing and start looking for how to start a business. Especially if starting a business is not your core strength. And it is not core strength for 80% of the people, at least. Even for the people that feel that is their core strength, it's not easy. So instead of waiting for the day you open a business, start investing in businesses by investing in stocks. Is a smart idea. That I mean it when I say that investing in stocks is a superior investment strategy. And sometimes when I attend some general investing conferences, right? People want you to say that, oh, all investment strategies are the same. It just depends on the one you like. I'm like, not really. Not really. Stock investing is a superior investment strategy. Investing in stocks is a superior investment strategy. I would like somebody to take me up on a debate on that. Seriously. If you're an investor and you focus on any other type of investing or other investment strategies, take me up on a debate on that. Investing in stocks is the superior investment strategy. I believe it. I believe it with my full chest. So I'm inviting you to register for that workshop. Please do it right away because you will forget. Procrastination is the tip of time. All right? Do it right away. Okay, I see somebody here. Somebody says, this is awesome. Please, how can I reach you? Oh, I've seen a lot of comments here. Wow. All right, I'll bring some of these comments on. Okay, let me show you these comments. Oh, so this is Olivia Shine, and Olivia Shine just repeated. Okay, Olivia Shine wrote investonomy.com/stock. So Olivia Shine, there's, you see why I said that I was showing it, right? Like your R is missing. The R for the investor is missing. The R is missing. So please check the description of the video to see the correct link. There's a mistake here. Okay, I'll show you the correct link. Just give me a moment. This is it. You see, there is an R. So it's investor nomi. Okay, there's an R. So please check. All right, let's see. This person said, this is Derek. Say, hey, Dr. Linda. Thank you, Derek, um, for saying hi. Thank you very much, Derek. So I see Amanda says, this is so insightful. Thank you, Amanda. Where are you joining us from? Then I see Mr. Joe from LinkedIn. See, so some people joined. I'm actually streaming on different platforms. So Mr. Joe joined from LinkedIn. Say hi, Dr. Linda. Thank you very much. Others have joined from, yeah. So let's see. So we have Victor. Victor is saying, wow. Victor joined from Facebook and say, wow, I usually confuse stock trading with investing in stocks before. Thank you, Dr. Linda. All right, thank you very much, Victor. Let's look at okay, this was, I love the impact. Thank you very much. Let's look at, these are people who joined live. Okay, so this person says, this is awesome. Please, how can I reach you? All right, let me show you. You can send us an email. I see. You can send us an email via admission@investonomy.com. Please take a screenshot. Okay, take a screenshot, admission@investonomy.com. If you can see, it is moving across the screen. And so send us an email and with your question or concerns or for the reason you want to reach out, and we can take it up from there. All right. Yeah. Okay. Again, bear in mind that these are the people that commented live. So I understand that there will be other comments, and that's totally fine. And wherever you're watching, so uh, my work cuts across people from different parts of the world. Whether you're in Canada, UK, US, Australia, any other country as well, you know. Um, and we teach people of all race actually as well. So, uh, irrespective of your skin tone, you can take advantage of this opportunity. It's not to a specific set of people or stuff. So, again, I think the main thing there is for you to go to www.investonomy.com/stocks and register for the workshop today. Um, Join me over there, register for the workshop today, and learn how to invest in stocks like a pro. This is a superior investment strategy. If you're looking for how to grow your money, this is what you should be looking at, especially if you're in your 20s, 30s, or early 40s at least. I mean, every other person, right? But I'm saying every other person can look at it. But if you are in this age bracket, yeah, you should look at it, because many of the other investment strategies out there, you may not even have enough resources to take advantage of them. Then you feel like maybe you shouldn't be investing right now, right? So take advantage of all this. All right. I told you my name is Dr. Linda Pajuel, and I'm the founder of Investonomy. Myself and my team, we train you to become a stock investing pro so that you can invest for yourself. You can invest in stocks by yourself. You invest and manage your own money. We believe that this is how we contribute to this generation. And I want you to become one of those who benefit from that amazing work. We're here for you. I want you to benefit from it. Take advantage of it while it lasts. All right? What should you do next? Register for that workshop. Look at the link at the description of this video. Register for that workshop and let's go from there. Take good care of yourself. Till I see you again. Bye.